Hey, friends, families, neighbors. Just doing a quick market update here for you from my beautiful home. Got the workout gear back up over there. I'm in my home office in my bedroom, just trying to plug away and do what I can for as many people as I can right now. I've got a lot of applications that are pending right now because we are waiting for the market. But I wanted to talk to you real quick because I'm getting a lot of questions right now, and I wanted to answer this head on. Forbearance is available on your mortgages right now. Should you do it? If you need it, absolutely, right? The government is providing alleviation, banks are providing alleviation for people who are in need. And it's almost across the board, everybody could take advantage of getting a forbearance. But I do want to encourage you guys to consider one thing, that if you don't have an effect in your income and you don't need to take advantage of these forbearance, keep doing what you're doing. Taking advantage of the system could have a negative effect on you long term. And the way that could happen is that right now rates are supposed to be as low as they have ever been. Banks aren't doing that. A lot of our common sense underwriting that we could do for self-employed people are kind of on a hold right now until they know where their money's coming from, where they can, sell those non-QM loans on in the secondary market. So we don't know what's going to happen with those right now, and people who are self-employed and that are really affected. Do what you got to do, right? If you need it, but if you don't need it and you don't have an effect in your income, guys, keep plugging away, keep fighting the good fight, because when we come out of this and we have our capacity back to normal, if mortgage-backed securities, which we'll take a look at the market right now, the bond market, stay the way it is, even if it's only for a few days, we're going to be executing on some of your guys' loans for the lowest rates that you have ever seen. But if you're in forbearance, you're not going to be able to take advantage of that. You may need to make 3 payments out of forbearance to show that you can afford your mortgage again. You may need to make 6 months. I don't know. We don't know exactly what's going to happen in this industry when we come out of this, because we don't know how long all this quarantine thing is going to happen with the COVID virus. So if you don't have an effect on your income right now, keep plugging away, because when we come out of this, should things stay the course, and I'll keep doing market updates to let you know if we are or not staying the course, you guys are going to be able to take advantage of some of the best interest rates you have ever seen and will ever see again in your lifetime. And that's going to save you tens of thousands of dollars over a few months between skipping mortgage payments, then when you do your refinance, and the lower mortgage payment and the lower rates that you're going to have available for you at that time. So I can only encourage you guys to keep making your mortgage payments. Don't forget that if you have an escrow account on your mortgage payment and you're going into forbearance, you're setting yourself up to end up having a higher mortgage payment overall when we come out of this, because you're going to have to make up that difference that you didn't put into your escrow account to pay your taxes and insurance, because those are monthly breakdowns of whatever your tax bill is per year, whatever your insurance premium is on your home per year. So you still have to make these payments because the premium's still going to be due. California and the county is still going to ask for their taxes for the year. That's how they're able to keep paying the fire department, police department, and everybody else who you need their essential services right now that are paid for by the county. And so your money is super important to keep putting away to pay for those things, because you could come out of this with more debt, higher mortgage payments, because you have to make up for this forbearance that you're taking advantage of right now. If you need it, take it. I get it. I get it. But if you don't need it, don't take advantage of the system, because we're all the better for the people who can keep fighting the good fight and keep doing it. And if you get short-sighted on instant gratification for a couple $1,000s, you hold yourself back from being able to save tens of thousands of dollars when we're able to take advantage of these rates. So let's take a look at the market real quick, and I'll do a quick screen share here for you, and we'll take a look at where the mortgage market is. Okay, so here we are in mortgage-backed securities, guys. It is as high as it's ever been. Now, we had a little bit of a dip today, which is fine. Rates really aren't reflecting where they should be right now. But they still, if we come out of this, they're as high as they have ever been. And rates, when these go up, rates go down, guys. So as soon as we get through these capacity issues and these overlays that the lenders are adjusting to right now, and we get some normalcy back in the market, rates are going to be phenomenal. Here's the 10-year bond. If you look on a 1 month scale, right now 0.65. Guys, that is incredible, like historically incredible lows for the 10-year bond. And when the 10-year bond is 10-year treasury note is low, so are interest rates. So I can only encourage you guys to really take a look at the highs that we have on the 10-year treasury note and the mortgage-backed highs on the mortgage-backed securities and the lows on the 10-year treasury note to monitor exactly where we are in the current interest rate market right now. And we're in a really good place. We're in a really good place. So if we get some normalcy pretty soon here, interest rates are going to be able to be taken advantage of at an amazing historical rate. So that's all I got for you guys, and I hope my message here finds you well, and I pray for all your health and everybody to come out of this on top. We'll be in touch, guys. Bye.